what's going on, guys? How my bulls, how my bull bays doing? It's Chase, ever bullish, the stock Sherpa on YouTube. Chase, the YouTube portfolio manager, the first, the greatest, and as far as I know, the only. And we're gonna make that a thing. I appreciate all the followers. I appreciate all my readers, all my bulls, and all my day ones. It is the middle of the day here on today's Wednesday, and the market is again trending down big time. So I'm going to do a couple of quick things. I want to keep the content coming your way, and as always, the most important thing is I want to keep you guys abreast of what I'm thinking as a professional trader and a pretty experienced trader as well. So I want to give that to you guys, and I also want to answer a question or two that I've gotten from some of my day one bulls. Please comment, please ask questions. This is what I'm here for. And I'm really excited that I have a couple questions to answer. So I think it's a win-win for everybody. I spent the last 2 years trying to figure out how I was going to run this channel as well as my business of everbullish.com with the mission of uplifting the consciousness of the average investor such that the institutions don't always win. None of these are scripted. I'm just free-reeling right now, free-rolling, free-riding, whatever you want to call it. But first of all, that song. Let's get to it. That song was Happy by Pharrell Williams. As Jay-Z once said, I call him for real because he's the realest. The reason I'm happy is I'm happy when the market goes down, particularly when I'm in a sector that is up. So if you've been following along, you know that I'm bullish on LABU, which is up right now. Actually, it just came back down to flat. EOG, which is a stock that I recommend all the time, is flat. A stock that I'm in big time that is down pretty large because I have an option for October is SOS. Bitcoin is down pretty substantially today too. We're bouncing around 54,000. So SOS only being down 7 doesn't scare me. I still think it'll be above 5 at some point by October, which cashes me a pretty righteous return. If I can get it to 5, I'm probably looking at about a 30 to 45% return in that based on historical volatility, what's called IV. RIDE is down 6%. I'm really starting to feel kind of sketchy about that one. I'm still bullish on the first to market. I'm still bullish on most of those things that I mentioned in my last video about Lordstown Motors / RIDE is what I call it. I'm still riding with Lordstown. Price target's having to come down a little bit, but all this negative pub in the sell-off in tech is a pretty good explanation of the correlation that it has. Remember, I like to trade on correlations. So let's roll through it. What's up? We got Amazon down 2%, Facebook down 1%, Microsoft down 2%, Netflix down 2%. Some SPACs that are down significantly more. One that I was following on here, and it's not for me, but it's to see where the dumb money is or where the most of the public square money is. And that's on Virgin Galactic. I watched that one and I noticed where public money is going based on the sell-offs. On that one, it also tells me how the SPACs are doing. So that one's SPCE, it's down 10%. When my stocks are only down, even my biggest kind of gambles are only down 7, I still like that. Arrival was one that I mentioned the other day, and the strategy that I discussed potentially doing was selling, actually placing buy limits at a pretty low price so you can pick it up on the dirt cheap, and that's happening right now. So I love it when all these things happen, but the biggest success right now is that LABU is up. ERX, which is another one of my bulls, is up. If you haven't caught on yet, I'm going to keep pounding it into you. The most important thing that you can do, particularly in volatile markets or straight sell-offs, is to be in the correct sectors at the right time. It's very easy to do that. I'm giving you the keys. I'm the Sherpa, baby. We got the quick draw set. We've got the carabiners ready to go. We've got the ladders over the crevasses, and we're climbing up to the top of that mountain together. And I'm setting all the hardware for you. So keep following and keep liking and subscribing, commenting, please. Self-promotion. All right, a couple things going on here that just come to the top of mind. If I was still in the advising game, I would be telling you that right now there's a couple options that you can do. You can take your gains and throw them in cash. You can hedge. Hedge is what I talked about quite a bit last time. Let's say that you have a straight one play on the NASDAQ. let's say, okay, I got a good one. Let's say that you bought QS like yesterday or the day before when I recommended it, and now it's down 7 or 8% today. It beat earnings, but it has bad news. I saw something on here about it, so it's on the front page of Yahoo, which isn't always good. So I'm going to type in QS. Let's pretend that you own this and now you're a little scared. Let's say you bought a big position trying to scalp a bounce on it. Yeah, it's down 7.8%. The bullish pattern's positive. The short-term, mid-term, and long-term are negative. 1 year target estimate is 57, and right now we're at 27. I told you guys I like it around 30. Let's say that you bought this and now you want, oh yeah, that's what it is. They reported a wider than expected loss. The quote here, just reading this off of The Street, which is on the front page of Yahoo Finance right now for everybody, is, quote, since going public in November, we have advanced our technology considerably and hit our technical goals as demonstrated in the technical performance of the data we released. So they did miss, actually it says that they missed estimates, that's what it is. I misread that the first time. But so that's probably going to scare off some investors. We also have a tech sell-off right now, so I think it's a good time to buy. But going back to, if you had a big position, let's say you had 100 grand in this and you're trying to pick up 5 or 6 on the pop and you didn't, another thing that you can do now is sell off half that position and then buy the SQQQ, which is the triple down on the NASDAQ. So the SQQQ, for example, since we're getting negative correlations because it's the short, right? S is for short, QQQ is the standard for NASDAQ. So if we type in SQQQ, it's the ProShares Ultra Short. That's the one I like to use, super liquid. That one's down 6 right now. The day range has it down even more. I'm sorry, I should say up 6 right now because the NASDAQ is down. So you could take 50,000, you're basically freezing your position because these things correlate so well. And then if it continues to go and now you're really liking QS, you could sell it and then use that money to dump back in, because remember, this moves 2 times. So that's a way that you can hedge. And for all the hate on people that take hedges out there, it's a safe way to invest. I don't personally know where the NASDAQ is going to go, obviously. In my own personal opinion, I think that this is another sell-off. We're seeing a lot of these kind of scaredy cat institutions that are going, all right, interest rates are going up. Traditional wisdom says to shift to value, but I don't buy that at all. I think it's a good opportunity. I only look at the market and what's going on at the present time with my own kind of inclinations of the future. But as you all know, as traders, the math is going to tell you that almost every single time that you invest, you're wrong. The average investor on the Dow bar study says that you get in at the wrong time and out at the wrong time. So that's true of where flows are going as well, particularly on what days they go. That's why I tell you guys so much about Tuesdays, because that's when the smart money of the institution rolls in. So going back to that, if we just think long-term, I believe that the NASDAQ will be positive. Mid-term, I think there will likely be positive. Short-term, I have no effing clue. And that's why I trade. That's why I'm not just a buy hold. That's why I don't do a ton of long-term holds. So with that being thought of, and the complete recognition that there's so much that I don't know, that opinion is really more of an opinion than a hypothesis to trade on. I'd rather just dissect it into sectors like I have. I know I'm harping on that, I'm pounding on that. 12 years of trading and every mistake in the book, I can tell you that the sector's swings are probably the most profitable. So anyway, LABU looking good, ERX looking great, EOG looking great, QuantumScape looking bad. If you want to enter that, I'm still bullish, go ahead and throw some limits underneath it. Bill Gates isn't going to screw that up. Negative publicity is good, and that's why I am happy. That song, Happy. Pharrell, I mentioned before, you got to learn how to be happy when the market goes down. Especially, again, sometimes I question this. It's almost like the euphoria of picking a good stock is even exemplified when you're in a stock that doesn't go down when the market goes down. And when you start to get those mental rewards and that dopamine hit from having your hypothesis proven to you, you just become a better trader. All right, I'm going to get to answering some questions. Tired of looking at that ugly guy behind me. Here we are. I had some good positive stuff on that. Oh, real quick, Arrival. It's only down a tiny bit today. I think that's showing a lot of convictions from institutions. And just jump on that. This isn't advice. This is a newsletter. Legally, this is for education only. Blah, blah, blah. All right, a guy named Steve, one of my day one OG bulls. He liked the song Madness. He's been doing some really good things trading. He's asking if the NASDAQ is going to completely bleed or sell out and crash. I don't think either of those things are going to happen. It's May right now. There's a philosophy of sell in May and stay away because the summer months are historically thought of as being bad. The data actually proves otherwise. The last couple summer months have been stronger than heck. I'm just going to break it down to this. I think the bleeding won't continue. It's going to be a choppy. It's going to be a choppy trade. If I had to guess right now, from May to July, we might be sideways. We may be slightly negative, but we're likely to be positive. And because of that tilt, I'm just going to keep on all my trades the same. The reason I think that, to back up that without just giving you nothing but opinions and no real concrete evidence, is just we have the most accommodating Fed that we've ever seen in our lifetimes. We have an incredibly large Fed balance sheet, 29, 30 something million, Jesus, God only knows. And the only way we're getting out of that is by inflating our way out of it. Just yesterday we had Janet Yellen come out and say that, look, it's going to be accommodated forever. Our job is not done here. Don't hate on us because we are going to keep things low, even though the economy metrics seem to be improving. In an improving economy, remember, you got to slow it down because of worries of inflation, and the way you do that is by raising interest rates and limiting the money supply, and we're not doing either one of those things. So I don't think inflation's coming. Straight up, fight me. I've got some funny comments about me saying that. That's why I said that. So anyway, Steve, there's the answer to that question. He's concerned about the slope of the S&P from a year ago. He's concerned about a boulder falling off a cliff. I'm with you. It's going to happen at some point, and so is the apocalypse, and so are all kind of other things, right? It may not happen in our lifetime. It may not happen in the months, right? So I look at it the same way with SPY. We're a great company, or we're a great country as far as commerce and business. The U.S. dollar is still what the majority of all commodities and assets are denominated in. I don't care about the weakening of the dollar. It actually helps international trades, which are basically mega cap trades now. I've mentioned before, I don't actually even hold any international exposure in any of my portfolios because the revenues of large companies are already attached to those. Essentially, I'm just saying we're all in this together. The money's going to move around. It's going to change rooms of the houses, but it's not going to leave. If it does leave, we'll just go short. And that's what we do. We're traders. If I seem flippant about this, it's because I've overreacted to all this shit and made all the mistakes in the past. And the more we can handle our emotions and not listen to the noise and identify the signal from the noise, the better off we're going to be as traders. All right, enough of that. Let's move on. Thoughts when we might find a bottom on the NASDAQ? No, I don't have any thoughts on when we're going to find it, but we will see weekly bottoms. I don't even believe in the clinical definition of a correction. Clinical, I didn't mean to say clinical. The standard definition of a correction, I don't really believe that a correction is necessarily a 10% drop from top peak to valley or a 15% drop, as companies like Fidelity or Schwab will tell you, especially given how many people are investing in individual stocks and ETFs instead of mutual funds now, which limit your ability to trade to buy a tiny margin. So I just think this is kind of the new normal, even though I hate that word in that phrase. Valuations are still insane, yet companies seem absurdly low given their potential. Completely agree. That's why we buy those companies and we stay away from the big boys. Prices are insanely low, impossible to fight against. Panic selling. Agree. Panic selling is a big problem, but remember, it also provides liquidity so you can buy it cheaper. I want to systematically watch all of your videos and try to understand your approach. Keep going. Thanks, man. You're the best. I will keep going. I'm especially interested in any insight you have about how institutions decide to rotate sectors or pull them out of the market altogether, and how they manipulate prices. You have to outsmart the enemy. Dude, bullish. I completely agree, man. Yeah, that's well said. So I'm here to tell you more experience than probably anybody else on YouTube that's actually telling you the truth. Institutions typically don't rotate sectors unless it's a sector rotation strategy. There's some companies investment companies and strategies that do complete full-on sector rotation, in which they try to buy and sell at inflection points, and go back to that mean reversion. I used a statement in my video when I rewatched it yesterday that mean reversion is kind of the gravity towards the standard price of something. We're seeing that in oil right now. But as far as institutions go, I think you would be astonished at how little they actually rotate, even when they tell you they're going to rotate. Sometimes it's only 1%, 2%, 3% max. They almost never get completely out of a sector because then that would provide them, not only would it provide the upside that you deserve, it would provide them too much downside risk so that you'll take their money elsewhere. Remember, institutions make money on an annual basis based on the fees that you pay because you're lackadaisical enough to stay inside of it. All they're trying to do is stay close to average expected returns, which are, in my opinion, already insanely low, and that's why there is no value in that, and that's why I do what I do. But to go with that, institutions actually don't rotate as often as they say they will. In my own portfolios, I do it quarterly or based on any economic shock, and I buy what's cheap and I sell what's made me money, and I don't expect to go any longer. You'll notice the Ever Bullish One portfolio did not, it's only had one rebalance this year, and it wasn't really even sector rotation based necessarily. I got out of a couple companies. I bought more Ride, and that's not paying off yet. Happy to admit it. I think it will by the end of this year. They don't pull out of the market altogether. That's called tactical investing. There are some strategies that do it, but that would be independent wealth advisory. If we're talking about the Green Machine, if we're talking about CS, if we're talking about Ameritrade, which is now owned by Schwab, if we're talking about a lot of the big common institutions, Merrill as well, they almost never do that unless the strategy is considered tactical. There's a couple great firms, one on top of mind out of San Francisco that does that. I can tell you more about it in private. I don't want to deal with any legal stuff. This is just a newsletter, and I'm just here for information on that point. But basically, they don't really do that. They don't do it the way you think they would, at least. And for 12 years, I dealt with clients going, why didn't you sell out? Why didn't you sell out? And the answer is that's not what we do. I do believe in rotating, however, and I actually completely, in my opinion, believe in going completely. I don't believe cash is king necessarily unless I have something to buy. I only cut off one finger instead of the whole hand, basically. But it's only in the event that there's something better to buy, like I talked about last week in Energy, like I talked about the week before that in LABU. Those both still hold true, and those are both very profitable for all of us. How they manipulate prices. They manipulate prices of commodities. They don't necessarily do it in the traditional form of stocks. What they do is they provide liquidity on prices. So I still love institutions, and I'm not hating on the guys. One of the things that they can do is like with Lordstown or like with SOS, which seem to be, it's like they're watching my videos. I know they're not, obviously. But you can feel that way, and when you feel that way, you're wrong. Basically, they don't manipulate prices as much unless, I shouldn't even call it manipulation, but they can go short on things that they think are going to go short for a while, and that short selling can cause panic selling, and then they can buy those stocks at a cheaper price. And that's your job as an individual investor, is to either fight against it or understand it and follow what they do. I'd rather follow what they do than be what people are calling bag holders now, or kind of blindly believe in my stock. It reminds me of people that like to gamble on their own like local team. It's like, oh, the Browns are 3-13 this year, but you know, we're just going to stick with them. It's like, yeah, I know that they are, but you probably shouldn't be betting on it. So I hope that tells you a little bit. We do have to outsmart the enemy. That's what I'm here for. I like LABU. I like Ride. I like SOS. Those two are down. I like QS. I'd probably try to enter at a lower price. I like Arrival at its current price, but why not get it for cheaper in case the panic sells off? If you want to hedge, you can buy some triples on the bottom. You can sell to cash. You can sell that half your position, buy the opposite, freeze the position. And I just think that's what I would do right now, straight up. Fortunately, I'm actually very bullish on the sell-off. But midterm, long term, I don't think that the fear of interest rates rising is going to cause people to stop buying innovative companies that have high PE ratios, so that they can own AT&T and Verizon and Southern Company and all these standard utility dividend payers. It's not my opinion. I'm hitting 20 minutes. I'm going to check out. Check out the Ever Bullish One podcast. Check out everbullish.com. Follow the Sherpas list. I'm going to update that either today or tomorrow. Thank you for following. Share it with a friend, neighbor, or stranger. I'm really onto something here, I believe, and I appreciate everybody that believes in me. Buy one of my cool t-shirts if you support the channel. You can always buy me a hypothetical cup of coffee. And if you have a retirement account or a trading account that you want to be kind of medium speed, but not have to buy a mutual fund and have zero control over it, buy one of my portfolios, implement my portfolios, and follow the rebalances with me. That will teach you how to trade. It will give you an insight into how to manage a portfolio and see if you'd rather do it yourself than hire one of these large institutions that I just mentioned to do it for you. That's all I got. I'm Chase. I'm out. Ever Bullish, the Stock Sherpa on YouTube, the first, greatest, and only portfolio manager on YouTube. Thanks for following. Thanks for watching. Please like, comment, subscribe. I'll answer more questions. Thanks. Bye.